me ask you something that most people never think about until it's too late. What happens to your money when you can't speak for yourself? Not when you die. I'm talking about right now while you're alive, but unconscious, in a hospital bed, or mentally incapacitated, or simply unavailable. Because here's the brutal truth that attorneys don't advertise. A judge, a complete stranger, can legally freeze, control, and drain every single account you own. No warning, no vote, no appeal. And in 2026, with new court precedents quietly expanding judicial asset authority, this is happening to more families than ever before. But there are 4 specific account types that can be legally shielded before that ever happens. Stay with me. This could be the most important financial video you watch all year. Context: why 2026 changes everything. Most people assume their money is protected because they worked hard for it, paid their taxes, and did nothing wrong. That assumption is expensive. Courts operate on a concept called guardianship and conservatorship, and the laws governing these have been dramatically expanded in recent years. In 2025 alone, conservatorship filings in the United States increased by over 34%. What does that mean for you? It means if you become incapacitated, even temporarily, and you have no legal documentation protecting your accounts, a court can appoint a conservator over your finances. That conservator controls your checking account, your savings, your investments, your retirement funds. They decide what gets paid, what gets sold, and what percentage of your own money covers their fees, which, by the way, can legally come directly out of your estate. This isn't a conspiracy theory. This is probate court. This is Tuesday, and the 4 accounts I'm about to show you are the ones most vulnerable and the ones you can protect today. Account number 1, your basic checking and savings account. This is the account sitting at your local bank right now with your name on it, only your name. This is the single most vulnerable account you own. Why? Because it has no automatic beneficiary, no transfer mechanism, no co-ownership structure. It is a solo account tied entirely to your legal capacity to manage it. The moment a court determines you lack that capacity, that account becomes subject to court supervision. Period. The shield. A durable power of attorney combined with a joint ownership structure with a trusted person. A durable POA is the key word here. Durable means it stays valid even when you're incapacitated. A regular POA expires the moment you become mentally unfit. Most people have the wrong one. Additionally, adding a trusted co-owner, a spouse, adult child, or trusted partner gives that person immediate legal access without needing court approval. But here's what most financial channels won't tell you. Don't add just anyone. A joint account owner has full legal rights to withdraw every dollar. This isn't a shortcut. It's a serious legal decision. Choose wisely and document the arrangement clearly. Action step: call your bank this week. Ask specifically, is this account durable POA compatible? And what's the process to add a beneficiary or Account number 2. Your retirement accounts, 401k and IRA. Here's where people get completely blindsided. Most people think their 401k is protected because it has a beneficiary designation. And you're right, at death, that beneficiary designation kicks in. But what about before death? What if you're incapacitated for 6 months, a year? Unless your plan documents explicitly authorize your designated agent, the person named in your durable POA, to manage distributions, make investment decisions, and prevent penalty withdrawals, a court can step in and appoint someone who can. And here's the painful part. Early distributions made by a court-appointed conservator can still trigger taxes and penalties against your account. Your own money, taxed and penalized because you didn't set up the right paperwork. The shield. First, update your beneficiary designation today, not next month. Today, an outdated beneficiary form overrides your will. It overrides everything. Second, work with your plan administrator to ensure your durable POA document specifically references retirement account management. Many standard POA templates don't include this language. You may need a financial attorney to add a retirement account rider. Third, consider a revocable living trust as the secondary layer. A properly structured trust can hold the beneficiary designation and ensure seamless management with zero court involvement. Account number 3, brokerage and investment accounts. Your brokerage account, whether it holds stocks, ETFs, mutual funds, or bonds, is another silent target. These accounts are typically titled in your name alone. They generate statements. They have value, and courts love assets with clear, documented value. In a conservatorship scenario, A judge can freeze your brokerage account, preventing any trades, withdrawals, or transfers while the legal process unfolds. That process can take months. Meanwhile, markets don't pause for probate. We've seen real cases where families lost tens of thousands in market value simply because they couldn't execute a trade during a conservatorship hold. The Shield. Transfer your brokerage account into a revocable living trust. This is not as complicated as it sounds. Most major brokerages, Fidelity, Schwab, Vanguard, have a standard retitling process. You remain the trustee. You retain full control. Nothing changes in how you invest or access your money. But here's the magic. Because the account is now owned by your trust, not you personally. A court has no automatic jurisdiction over it. Your successor trustee, the person you named, steps in seamlessly if you become incapacitated. No judge, no conservator, no delays. Additionally, ensure your brokerage account has a transfer on death designation as a backup layer. This costs nothing to set up and takes 10 minutes. Account number 4, your digital and crypto accounts. This one surprises people the most. In 2026, digital assets menus cryptocurrency digital wallets, fintech accounts like PayPal balances, even Somi Havali loyalty programs represent a growing portion of personal wealth, and they are almost completely invisible to traditional estate planning. There is no beneficiary form for your Bitcoin wallet. There is no TOD designation for your Coinbase account. If you're incapacitated and the only person who knows your seed phrase or two-factor authentication is you, that money could be inaccessible forever. Courts are only beginning to grapple with digital asset conservatorship, which means the legal gray area is massive and dangerous. The Shield. 3 layers of protection. Layer 1. Create a digital asset inventory. A secure, encrypted document listing every platform, account, wallet address, and access method. Store it in a fireproof safe or a secure password manager with emergency access enabled for a trusted person. Layer 2. Add your digital accounts explicitly to your durable POA and living trust documents. Your attorney needs to know these exist. Layer 3. For significant crypto holdings, consider a hardware wallet with a documented recovery process accessible to your designated agent, not shared publicly, but legally documented and stored securely. The real warning. Here's the hard truth that finance theory is built on. The system is not designed to protect your money. It's designed to process it. Courts, conservators, and legal fees are an industry, and unprotected assets are their raw material. The 4 accounts we cover today, your bank accounts, your retirement funds, your brokerage investments, and your digital assets, they are all vulnerable right now if you have no plan in place. But shielding them is not expensive. It's not complicated. It is simply a decision that most people delay until it's too late. Don't be that family. Here's your action list before this video ends. Update every beneficiary designation today. Review whether your POA is durable, not just standard. Ask your attorney about a revocable living trust. Create a digital asset inventory this weekend. If this video opened your eyes, share it with one person you care about. Subscribe to Finance Theory for more strategies the financial system hopes you never learn. And I'll see you in the next one.